All right, guys, the S&P 500, the futures market that is just hit 7,000. What does that mean for you? This is a psychological number, and this might mean we're going to continue to break out, but I say we need to be careful. This is a psychological level where a lot of people, a lot of institutions will be taking some profit, so be careful on the road ahead, guys. Anyway, guys, welcome to another video. This is another episode of Web Trading Review. We're gonna take a quick look at the week and see, where we might be heading going here. Right from the get-go, before anything happens, I don't know if you guys have seen the news. It seems like Jerome Powell is going to be investigated for some criminal crime. I don't know. So that's interesting. We don't know how the market is going to react yet. So we'll see how that plays out. But what we're going to do is let's just focus on the chart because that cannot tell us exactly where the market is going to go. But all we can do is take a look at what we have coming up. This is a busy week for the market. If we go right here, right now, in the calendar for this week, you guys can see on Monday, this is what we have. Not much on Monday, really, but there's a couple of federal Fed governors or president that actually have a couple of speeches. On Tuesday, this is where it gets juicy. On Tuesday, before the market open, we have CPI numbers coming out. At 10 a.m., we have new home sales. You guys can see that here. At 2 p.m., we have a U.S. budget deficit. So all those numbers can affect the market. They can shoot it up or shoot it down. So expect some volatility this week. For those of you guys that's trading, that's doing day trades, so you're doing intraday trading, that will be a good opportunity for you guys to take some positions. But be very careful because the market is going to be erratic, it's going to be irrational, and you don't want to be on the wrong side of a trade because I do believe those trades will move very, 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 very fast. All right, so be careful out there, guys. And when you will look out on Wednesday, also on Wednesday we have before the market opened, as before the open, we have core CPI, we have producer price index. Those numbers were delayed, but they're going to come out right now. We have business inventories, existing home sale. That's another thing that can also play with the market. Then we also go into import prices on Thursday, jobless claims. As you guys can see here, this is a very, very busy week. So I do expect a lot of volatility in the market. The volatility index actually has been pretty low over the past I'll say over the past couple of days, the volatility index has been actually pretty low. So we'll see how all of that plays out. All right, so if we just dig in directly, we're not gonna waste too much time. Let's dig in right in the chart. I have a couple of things I was taking a look at for you guys, but right now the first thing I want to take a look at is the S&P 500. All right, if we go on the SPX, and I'm taking a look at the S&P 500 for one reason, guys. I'm taking a look at that because it does not have all the noise coming from things like overnight market or anything like that. It's pretty clean. There's no after hours trading or anything like that, so it removes all the noise. So what we have here, what you guys are looking at here, this is a channel that I created. This is a weekly channel. All right, to properly see that, because it's such a long channel, this is what we have. Again, for those of you guys on the channel, again, if you're here, thanks for being here. Make sure you like, subscribe if you have not subscribed. If you're watching this on replay, make sure to subscribe and smash the like button for me, man. I would really appreciate that. If you have any questions, make sure to let me know right in the chart again. So going back, this is what we're looking at right now. This is the COVID lows, right? So we have the COVID lows that are literally right here, and you can see how this trend line has been respected all throughout all of that. This is the bear market of 2022. The bear market of 2022 was right up on that channel and comes right down to this level, right? We had a nice one from 20 for 2 years, and then we dropped down, right, hit that channel, then we pretty much we slightly push back up, test it again. As you can see, we pull up, and these are the liberation day, like the tariff talk. And then this is where we are right now. So when you take a look at that, what exactly do you guys see, right? When you take a look at that, what you guys should see clearly is, first of all, we are right at the top of the channel, meaning the good play is right now, the best possible play right now. Sure, we can break above and continue to run, right? This is something that is possible to happen. However, if you really want to look at it, the biggest opportunity is toward the downside, right? That's the big opportunity. And why? But that's what I'm telling everyone. Even though it seems like okay, we're breaking out, it seems like okay, with that breakout, we can squeeze a little bit. We can still squeeze a little bit, get a few points off of it, off of the uptrend a little bit. But don't be surprised if we see a big pullback, right? You can't be surprised at that, right? This is the line that I have right here. I had that line. This is the resistance line. We actually looks like we are breaking above that resistance line, but is it convincing enough? I mean, you can say that because why? Let me zoom in. You guys can see we finally break. We pull back, right? So we break that. We pull back and test the previous resistance, which is now support, and now we have a beautiful, nice candle, right? And we think we're about to go to the upside and completely won. And a lot of times, this is how they get you. If you got caught in this because the market reversed, that is not a bad trade, right? That is not a bad trade. Why? This is a break, retest, so we're expecting the next leg up. However, one thing we can notice whenever we get into this area, a lot of funky things happen, man. A lot of funky things happen. We have certain news that comes out. We have certain data that comes out. There's always it always seems to have coincide with some sort of event and something we could not really foresee. Really, that happens that drags the market down again and again and again. So, and if you also want to take a look, while we're taking a look at that, you guys can see this, right? This is what this looks like. As you can see, so we have 1 point, which right here fell, try again, fell, and now it seems like we're doing a little bit more push. This is the thing they tell you about history, right? History doesn't repeat itself, but history rhymes, right? This is what they say all the time. Look at what we did right here at this level. Let me zoom in so again so you can see it. So what exactly did we have here? This to me seems very, very similar, right? We came here and we dropped. We came back again, drop again. So we having the exact same pattern. Look how similar these are, right? You guys can see that. Now when we go up here, this is what we have right up there. You guys can see it. This is what we're looking at, like right up here. It's the exact same pattern that we are looking at. Again, right as of right now, before market open tomorrow, I think the overnight market might be down a little bit because of that news regarding Jerome Powell. However, this seems like we might be a little bullish, but I always tell you guys that every single time I get very, very cautious whenever the VIX seems to be very low. And if we go take a quick look at the fear and greed market meter, we are at neutral, right? That's the good news in my opinion is the fact that we're not in greed. We're not in greed or extreme greed. We are at neutral. But what that tells me, the fact that you can see this is up, if we are at neutral now, it means people are starting to get a little bit more complacent. People are getting a bit more comfortable, a bit more confident, right? And this is how sometimes we get those black swan events. So is that news about John Powell being under investigation going to be the black swan event that swings the pendulum? We don't know yet. Although I would not be surprised if Wall Street doesn't like that. Wall Street does not like when presidents are going after the Fed. They really don't. And again, if we are looking at that, we can see this doesn't look very bearish right now. We have a beautiful chart right now. If you're looking at this, right? Let's take a look at the MACD real quick. Okay. The MACD actually has bullish divergence and in positive territory, which is good news. If you take a look at and that's on the daily. So if we go in the 4 hours, the 4 hours is showing what? Again, same thing in the MACD, but if we look at the pattern, we actually right on a breakout in the 4 hours. So this actually is looking very, very, very good. But I would not be surprised if tomorrow we actually pull back and come back right to this level, all the way down, and come test this again. Maybe give the bears a little bit of some confidence, thinking we're about to drop, and then we have one more squeeze. But again, for me, I'm not buying any leaps. You guys know I like to buy leaps, right? I'm not buying any leaps right now on SPY, and this is exactly the reason why I'm not buying leaps on SPY. There's no reason for me to do that right now. As a matter of fact, one thing I'll open to you guys to let you guys know, I'm starting to build more of a bearish position, very slowly, very methodical, and and I'm being very careful. I'm doing that with debit spread, so I'm not overexposed. Because yes, another squeeze can happen, but at the same time, partly why I'm doing that is because it's very low risk. Because again, I'm doing a debit spread. It's with a strike price that's a bit far away as well, and that's also I see it as insurance against my portfolio. So that's the way I'm looking at it. In case we have any black swan event, I'll be okay. All right. So I'm not going to sweat it. All right. So now let's go. Let's take a look at the Nasdaq and see what the Nasdaq currently looks like. We reviewed this all of last week. As you can see right here in that triangle, that ascending triangle, it seems like we are getting a breakout. Again, this is why I tell you guys, you do not automatically jump in a breakout. You wait. I mean, it is a very nice candle. It seems, it's above the 9 and the 21 EMA. Uh, we have some good volume coming in. This is a nice candle with a breakout, but that breakout has not been confirmed yet. It's not confirmed. All right. What's the number one rule I tell you guys about breakout? You need, especially at a strong level, you need continuation for your breakout. If a breakout happened at a very, very strong level, this is not a little intraday stuff that's very weak. Daily, weekly, monthly resistance level, you need continuation. All right. So unless we have a continuation candle, meaning we have a candle that closes higher than the candle from Friday, tomorrow, that breakout is null and void at this time. Okay. So that's how that works. You have to wait. I would not be surprised. I would not be surprised at all if tomorrow we actually have a down day and we right back inside the wedge. Okay, so this is a wedge pattern, or some people call it ascending triangle. Some people say it's a wedge pattern. Anyway, it is what it is. And again, if you look at it, there is like two inside of one, so we have a smaller, more recent, wedge that's been formed right here. And if you want to go a little bit further back, you can see there's a trend line that's right there. So we have a wedge pattern that's here. So it's not impossible for the Qs, that's the Nasdaq, right? So that's those big stocks like the Apples, Nvidias, and Amazon, Microsoft, and so on. It would not be crazy if we see that breakout actually fails and we pull right back to this level and do that before we have an exact direction, right? That would not be surprising because why? We did not complete they don't have to complete the wedge all the way to the end, right? But when it does happen, you're not surprised. All right. So as of right now, I am cautiously bullish. Even with whatever's going on, this is what I'll tell you guys. I am cautiously bullish, right? Because this little thing that comes out might pull the market down just a little bit, and then Tuesday comes, CPI numbers come out, and it's like, hey, you know what? Inflation dropped like crazy, and then we off to the races. All right. But the one thing to expect going into this week is volatility. We're going to get a lot of volatility this week. So expect it. If you are a day trader, just again, POP, guys. Let me go back right there so you guys can have it. If you are a day trader, remember it's process over profit. Do not chase. Do not get overly bored and start taking random trades. Respect your stop losses. Do not pull your stop loss back just because you see you're about to get stopped out. You're going to get smoked that way. All right, we've all been there. We've all made those mistakes where you take a trade and you see your stop loss is about to get hit, so you're like, ah, let me move it down a little more. And this is how you blow accounts. And for those of you guys that's trading with prop firms, by the way, I am an Apex partner. You will see that link below in the description of that video. So click it to get 80% off. They have 80% off right now. And at checkout, you will have to use that code POP, POP. You use that at checkout, you will get 80% off. Um, that being said, guys, we have to focus on the chart and try and watch and see what's going on with the chart. The chart seems bullish, but we are cautious. Again, we are cautious because if we're looking at the SPY, you might say this was not. For some people, they might say this was a retest and a pull. No, it is not. It is not because we drop, and if we zoom in fully, one thing we'll see is right on this level, which is a zone. I would say that's a zone. So if we take this as a zone, right? If we take that as a zone, let me just remove that. What do you see here? I do it as a zone because I want to include the wick of this candle, right? So if that's another as a zone, one thing you'll notice is this candle did not actually close outside of the zone. So that means this was not a breakout candle. That candle pretty much closed on no man's land. So this is our breakout candle. We broke out, right? So now we need continuation. We're going to need a candle to close above this. I'm not talking about something with with a crazy wick where you're gonna have something that sort of like do this, one of those little candles like that close above it. I don't want to see that. I want to see buyers in control, taking control and pushing stocks up. This is what I'm looking to see. And if we don't do that, it can go. It can go without me. I'm okay. I'll wait. I'll wait. This year for me, it's all about, especially beginning of the year with where we are currently, it's all about protecting the account. That's it. That's my number one goal right now is account protection. Because at these high levels, I think we're pushing it. We're stretching it right now. It's been a great one, and I do believe we're going to have a pullback that's going to happen. A correction will happen. I don't think we're going to go into bear market territory. Bear market, for those of you who doesn't know, is 20% or more of a drop. I don't think we're going to go that low. But I do think we're going to go into a steep correction, maybe like a 15, 20%. Then not a pullback. I think we're getting a correction. Unless a lot of things change all at once, this is something that is going to happen, right? So I'm being very, very careful. Again, if we look at just take a, even I want to take just a quick look right at right at Apple. You guys can see what's going on here, right? So I had this level. That's the previous That's previous resistance level, which now you can say is support. Apple went up. What did Apple do? I know you guys noticed. You guys absolutely notice. I'm gonna start needing you guys to drop those patterns when they pop up on those reviews, because you guys should know that pattern like the back of your hand right now. So Apple gave us a head and shoulder pattern, right? And then we drop, right? These are the kind of patterns we talked about all the time. All the time we talk about those here, head and shoulders, and then we drop. You can easily see it, easily see it. Um, and that's the crazy part. So if you wanna do a proper neckline, right? You could say your proper neckline is here, like so that was your left shoulder is here, and your right shoulder is this area here. Meaning we have a long way to go on Apple. Potentially, Apple could drop all the way back to this level. Now, what is that trend line that I have on Apple, guys? I'm gonna show you. Let me remove all this stuff on the chart so my chart is not too busy. Okay, that trend line that I have from Apple actually went all the way back to the liberation lows. It went all the way down. This is when it popped right there, right? Hits right there, and then it just continues to one. There's no surprise. There's no tricks. At some point, I know at some point we will touch that line. Is that going to happen right now? Are we going to do this to continue go up, or are we going to break down? I don't know, but it is no surprise. Apple currently, this is one little nugget I'll send out to you guys. Apple is currently at a good level that I like. I'm taking a look at it. I'm not confident in getting in yet because of the pattern that I see. I prefer waiting to see. I don't need to catch the bottom completely. I think that's a little too much. But if Apple decide to, consolidate a little bit, go up, do that, do this, then it comes here. Oh yeah, I'm jumping in. I'm jumping in with my eyes closed. I'm doing that. So we have a few stocks that actually does not look very good when it comes to the big guys. So the Qs are not looking terribly well right now. That's the thing. The market is running up, and the part that I don't like about what I'm seeing with the market, right? The market is running up. We're making all-time high. Meanwhile, it's just maybe like five or six stocks that's doing all the work. Everything else is just pretty much either dying or they just consolidating, not doing very well. And that to me is a problem. And the second thing I will tell you guys, I'm gonna show you guys something real quick. We all know tech drives the stock market, right? Tech drives the stock market. As goes tech, so does the stock market because they are the big dogs. So when you look at this, what do you see? Tech has not made an all-time high yet. This is the all-time high on tech, right? So that's the Qs. We have not made the all-time high yet. This is where we are. Meanwhile, if you look at the S&P 500, the S&P 500 is at all-time high. In my opinion, these things typically when it goes like that, it is the perfect condition for a drop. Perfect condition for a drop. We see it over and over and over. Typically, when the market drop, you always going to see tech drop a lot more than the S&P, right? While if we take a quick look at the COVID drop, right? Look at this drop all the way down, 16%. That's the whole drop we had, 16% drop. So that was a correction. Again, not a crash, not a bear market, but we had correction during that drop. Okay, unless you want to count the entire drop. If you wanted to count the entire drop, you'll say, okay, you know what? We got close to bear market territory. That's a 21% drop. So we got close to that, but it was just one day. We didn't even stay there. We bounced right back up that day, right? We actually We close all the way here. I think our lowest close was literally just avoiding bear market territory. One of the reasons why, if we close below a lot of those, okay, I'm sorry guys, I just realized I'm not actually sharing sharing my screen. Hey, I appreciate I appreciate that, Luna. I appreciate that, man. I just realized I was not sharing the screen. I just checked. This is what I was talking about. I did all this talking, man, and I was not sharing the screen. Let me go back. I'll show it back to you guys. I'll show it back to you guys. Again, this is what I'm talking about. All right, there you go. Boom. There you go. If you're looking at the cues, it should pop up right now. Everybody got that right now? I know it seems like I have a little delay with the live. If you're looking at the cues are breaking out. However, we're not at all-time highs on the cues. This is all-time high on the cues. The cues have not made any all-time high yet, right? Um, and as I said again, as goes the cues, so goes the S&P 500 or the market overall, right? So we're not there yet. Now we go to the S&P. Mean at the same time, if we check the S&P 500, we are at all-time highs in the S&P 500. We are at all-time high in the S&P 500, but tech is struggling. Tech is struggling, and so it's like every single stock that runs every day. This is how the stock market is going up, pretty much. Any little stock that goes up every single day, one thing you notice, they won a lot. Like when Mike one goes up, it goes up like 30 points. So if Mike one's up 30 points and you have everything else is down like 2, 3 points, it's making up the difference, therefore pushing up the cues, but it's not really the sector that's going up, right? So it's holding things together. And when you have materials, transportation, healthcare, do any additional move, that help push the S&P 500 up. And overall, we all know where the real money sits. The real money sits in tech because tech is the growth engine. Those guys want to make profit, right? Nobody really wants to stay in, let's say, Pepsi or McDonald's, so to speak. Those stocks are safe. They will go up. They pay dividends. But what exactly are they going to give you? For the most part, maybe they're going to go up what? Uh, uh, 5%, 10% for the year, instead of when you get into something like like an Nvidia that goes up like 800%. Those guys want to make money. All right, so that's the kind of stuff we want to really make sure we look at. And as I was saying, um, just going back to this level, so I can show you guys when we had our last correction. Okay, lowest close we had 19%. Below 19%, automatically the very next day we would have crashed because the algorithm would have automatically triggered sell orders because we closed at that level. We never closed below. We went there, right? But the close was always above. That's the look at that number again. The lowest we ever even got intraday. That was the intraday low during the Liberation Day lows was 21%. Now, let's take a look at the Qs and see what the Qs did. If we take the Qs from here and pull that down, the Qs were down as much as 25%. The Qs are always lower. Whenever we're going to have a crash, the tech sector typically is the catalyst. The minute the tech sector give way, we're gone. just uh, just go and take a look at the stock market and see all of the big, $1 trillion here. All look at the $1 trillion club and just count how many tech stocks is actually in the $1 trillion club. You're going to see the $1 trillion club is mostly made off of tech stocks. All right. But anyway, I'm having way too much fun here, man. I didn't even notice the time. For those of you guys that's part of the community or the paid members, I do apologize. This went a little bit above. I had to recover. I had to recover what I was talking about because obviously I forgot to change my screen back. I was full screen, talking to you guys and covering all this stuff. Um, I will still get on Teams for that live session right after this call. I will get on Teams, so be ready for that. I will get on Teams right after this call. But I'm gonna leave you guys with this. Again, I know I keep talking to you guys about POP, process over profit. Make sure you know your process and what it is, right? I see this close on Friday. I was in front of my computer. I took no call trade on that. I didn't. Why? Because my process determines that for breakout on the daily time frame, I need to see continuation. I'm not jumping in yet. I need to see continuation. And on top of that, we had this week coming in with all the data that we have coming this week. We just don't know what exactly was going to happen. But anyway, guys, I do appreciate you guys turning on. I know it's Friday night. Please make sure to like the this video if you haven't liked. If you took anything from it, make sure to check out my other videos. I do have some educational and trading strategies videos on the channel, so feel free to check those out. Make sure to let me know where you're watching from. For There's a couple of people that let me know you guys were watching from. I believe it was from Indonesia. I do appreciate you guys turning on. I really appreciate that. Take care, guys. Have a great day tomorrow. Follow your process. Do not go into tomorrow with any bias, saying, "Hey, there's some news. This is going to be a red day or whatever." We don't know. We still don't know what the market is going to do when that news is digested. So we have no idea. So take your time. Follow your process. Whether the stock market wants to go up or down, make sure you're on the right side of the trade. Keep your stop losses in place and be careful. I wish you guys the best. Go make some money tomorrow. Best of luck. Stay green. Stay warm if you're on the East Coast because it's freaking cold outside right now. I wish you guys the best. I'll see you